people don't understand what money is. We've been trained to think, and especially these days, that it really is only a tool of barter. Well, that's one of its aspects, and it's an important part of its aspect. But when you realize that the primary function why we need money to begin with is to enable a society to really specify and have different, you have a banker, you have a lawyer, you have a farmer, and so if we didn't have money, we'd all have to do everything all by ourselves. So it really enables a society to specialize. But then further than that, this is your time we cannot get back. There's 24 hours in a day and 365 days in a year. And once that time is gone, it is simply gone. And so to ensure that you are always paid appropriately and properly for your labor, though many, many things have been tried over the years, only gold meets all of the criteria to be a good and sound money. And its most important function is to hold its value over time. But that's a big problem for governments and corporations, because governments want to tax and spend. But when they tax you on a gold standard, you know about it and you might not like it and you'd get some pushback. When they do it on a fiat money standard, and fiat is government-based, it's by decree, so it's a government-based money, and it's about inflation, well, then the inflation tax is an almost invisible tax that people don't point to the government or the central banks and say, look what you did. They go, oh, look at this inflation. But inflation is not really a monetary phenomenon. It's a fiat money phenomenon by design. Because for corporations, it enables corporations to pay you less, but you think you're getting paid more. But when you stop and think about it, the average wage in 1971 was $9,500. And a family of four could live with one wage earner on $9,500. I think now, I just read this morning that in 2020, the average wage was $67,000 and change. So it sounds, well, yeah, I'd much rather have $67,000 than $9,500. But quite honestly, it takes two wage earners. And what were they stimulating? They were stimulating people that earned $150,000 and less. And even in this new tax package, don't worry, if you make $400,000 or less, you're not going to be impacted by this. Well, we'll see, because talk is cheap. But but what that does is really indicate the loss of purchasing power value of the money that we work for, that we spend our time working for, and we attempt to save for our kids' education, for our retirement, for many other reasons that we might want to save. And by design, they're going, oh, we have to do something about income inequality. But the reality is they knew this would happen. This is not something new. What's new is the central banker's control of the rate and speed of the inflation. Great Depression, for those in the bottom part of the K, they're already feeling that Great Depression. And that depression will lead to resetting the whole system. And what we're talking about here is very much what we talked about or not what we talked about, because I didn't realize what we were going through, but it is a social, economic, and financial system reset, because it's a debt-based system and they have to reset the debt, because the new system that they have lined up for us, and I don't think they're done with it yet, is the central bank digital currencies to take everything and all titles online. And I hate to say this, but to create, I feel like we're going back to feudal times where you have the lords that own everything and the serfs that own nothing, but they're renting everything. And that's the gold. If you listen to the World Economic Forum, then you will get that sense there, because they are telling us you own nothing and you're happy. Well, look at how much rents have gone up. You're not going to be happy. Mm-hmm. So the Great Depression and the Great Reset are one and the same, and the reset will occur when confidence is lost in the currency. And, in many ways, inflation, even at 2%, is resetting the value of the currency. So the Great Reset is the overnight devaluation that occurs. And typically that means that, 1,000 to 1 is a pretty average amount of resets. So if you have $1,000 in the bank and you wake up in the morning, you got one. Gold is the only financial asset, according to the Bank of International Settlements, which is the central banker's central bank. So it's the biggest bank in the whole world, right? Okay. According to the Bank for International Settlements, it is the only financial asset that runs no counterparty risk. Those dollars in your wallet or in your bank account, those are debt instruments of the Federal Reserve. So if this Federal Reserve goes away, or this Federal Reserve chooses to demonetize that, it goes away. What are you going to do? You buy a stock in a stock market? Well, chances are pretty good, if it's in a margin account, which it probably is, then many, many, many banks have the legal right, and do, to use your equity for their benefit, and use your equity as collateral and borrow, and then they can do anything they want with that money. If that bank goes under, well, we have the bail-in laws. Too bad, so sad. What are you going to do? Who are you going to call? Bonds? Bonds are a debt contract. So the counterparty, if the counterparty can't pay, we're seeing this with Evergrande in China and many other companies. But if a counterparty can't pay, too bad, so sad. So gold is critically important because it does not run any of those risks. No counterparty risk. And again, according to the Bank for International Settlements, gold held at home runs no political risk. And the thing about the gold is, and why it has historically never gone to zero, fiat currencies always go to zero 100% of the time. Over time they do.